All right, good afternoon, everyone, and welcome to Wednesday, March 4th, 2026. Trading Trends with John Salama, CMT here. Yesterday was a tough day. Very tough for CTAs, trend followers. One of the worst days I've had in a long time. I always try to keep it honest with you guys. I'm out of Korea, got out of the emerging markets, of course, on yesterday's massive slide. Let's get into what's going on today, though, because there are some very constructive things going on. This market is amazing and how resilient it is and how quickly. Whoa, I don't know what that was. Hold on here. Wrong share. Anyone home? Yes. Trading trend. Go. All right. So we'll take a look at what's going on today. You're seeing the Qs and Bitcoin pop today. I also got stopped out of the Ethereum short. So for that was thankfully, a small loss. We were in it short for, over a week. We can have something like that. This South Korea one of the problems with systems and trading is when you have massive gaps and it goes through your stops and then your discipline is really tested. One of the things, and we'll look at the intraday tape, and since the war over the weekend, the candles, and we'll look at it, like I said in a second, they've been buying them since the open. It's a liquid overnight. You see the futures. Oh my gosh, things are horrendous. And for the most part, they were, but the candle from open at 9:30 a.m. all the way to the close, they just bought them all day. Same thing yesterday, Tuesday, same thing today, and now SPY's within 2% of all-time highs. So we'll take a look if the market has truly, repriced so fast. But guess what they're doing today? Going through the quality. The big pops today, what they're buying here, as I talk to you live with the Nasdaq up 1.7%, and we will be focusing on the Qs in one of our charts. But today, the big moves is high yield. It was an exact reversal of Monday. I had to exactly just delete this line, a little Control X, cut and paste from the biggest losers to the biggest winners. This got absolutely smoked on Monday, along with emerging market bonds and stuff like that. And this is a reversal. High yield having a great day. We'll look at the chart and what happened, since Monday. Nasdaq, a big pop today, as I said, up 1.7%. And Bitcoin, a big pop today, up 7%. Is it finally recovered? Is it finally corrected itself? I'm not so sure, to be honest. The Qs in Bitcoin, to me, have different pictures, different forecasts. There's massive dispersion. This is what I was talking about when I was writing for Market Mosaic last week. SPY to me is really just kind of a different kind of machine due to the correlations within, away from energy, financials, software. So every index truly is going its own way. What are they buying that and selling at the expense of? Nat gas and volatility and a bit of Hong Kong. Forgive a little bit of the ampersand typo there, but nat gas and vol drop 4%. So those things are correcting itself. Let us take a look here first at the intraday dashboard panel here. Hope everyone's doing okay. Yesterday was a bad, not fun, no fun, ugly type day, truly. So if you had losses, wow, trading was very hard yesterday. Today, not as much. Q's up 1.7 to, say it again. NVIDIA up 1.5%. Tesla pulling the XLY up. A very nice day for Tesla, up 3%. Micron finally up 6.5%. Can't keep that champion down, up 38% year to date. And I check, it's March 4th. That's insane. Amazon up 3%. They're loving consumer discretionary. Less fears today about discretionary spending, it seems. Russell lagging a little bit, up 90 bips only. Microsoft up 1.25. Palantir up 4%. I do own Shield, SHLD, which is defense tech, and Palantir is a major constituent of. South Korea reversing the trend, up 2% after just a bloodbath. We will take a look at it. The most volatile, biggest down day in South Korean market history yesterday. A horrendous day. We will take a look. Coinbase up 15% in sympathy with Bitcoin, up 2x, right? Bitcoin down 3% year over year and down 9% for 2026. So not a great tape even with this. But of course, we know Bitcoin topped in October and Coinbase has been trading, in sympathy. AMD up 5%. They are loving some of the semis today. Meta up 2%. I am watching XLC. It's at a 1-month high. We are looking at that closely for the turtle system to get some exposure should this risk on trading persist. Broadcom up 2%, and again, IBIT will take a look, up 7.5%. Monster day for crypto. All right, so here is the opening bell. You should be seeing on your screen now. Here we go. And this is what I'm saying. So they opened it here and look all the way higher and higher, higher. I was keeping a close eye on that short-term resistance of 685 even. And look where we are live right here in SPY, 686. I'm rounding for simplicity's sake. We have largely held above 50 RSI in SPY ever since the low we put in yesterday at 10 a.m. when we had that flush to 670. An hour after that, short term, we've been holding 50 RSI. So very constructive trading. The 200 bar moving average here, each one constituting 30 minutes, it is at right here. So I like holding a rising VWAP. VWAP is 684.40, important level for SPY to hold short term. And then the next level is it's got to hold 685.20 even. It's been a brick wall short term. I'm looking at, important levels going back to February 27th here. So I'm basically looking at the last 5 days. And then should this hold, well, I still do see bullish tape going throughout. You're not going to have Nasdaq up 1.7 and SPY is not going to squeak higher. And again, what I always say, short term, fractal, don't care. When you have a breakout or breakdown above a former area with overbought, it's off into the races. We are getting very close to that. That exact marker is like 680. You can see on my cursor, 688.60, right around there. We're about $2 away, and that will coincide and correspond with SPY going above 70 RSI. And then don't forget, we are very close from all-time highs, less than 2% away. As I zoom out a little bit, because that's on the intraday stuff, on the intraday time frame, I've been saying all-time highs for SPY. Truly, my date I had for this is, check the notes here, around March 11th, which is a week from today. Two things, though, because this is, to me, the market's a little bit guilty until proven innocent. Again, I've been talking about this cement-like wall of support at 670 that's been going since Thanksgiving. You got to respect that. I know I saw a report today from, it was Wolf Research saying the SPY, very likely for a flush, will have to go to 655 to wash out, get to that ultimate pain, and then we can go higher. I'm not so sure it's possible because I did see, some weakness in the Qs and, of course, correlated assets. But so for me, I still believe, I've been saying it for weeks now, SPY will be tethered, straddled very close to 687, which it seems like it's been its 21-day exponential moving average since, my gosh, since, end of last year, November, December. Now we're in March and it's, 50 degrees outside. So seasons change when SPY is still, stuck in the mud. Two things. So the former high, all-time high, is January 28th. Seems like a while ago, but that was at 698. I'm rounding. This is going to sound maybe obvious, Helen Keller-like analysis here. We're going to be straddled, I believe, to 687. That's step one. Okay. Step two is I do believe we will get to that 698. The market loves to climb a wall of worry. This is going to coincide also with us re-grasping a 50 RSI. I want to see the stochastic momentum mix finally start to curl up a little bit. You're seeing an awesome hammer yesterday. That was great. Trading very, very constructive. Today it's holding VWAP. Should we hold 698? I do believe we will get to right around that 703. I'm still looking at that for a 1% FOMO run up. After we get to that all-time highs, folks are going to say, I cannot believe this. We're in a war. Block is laying off people. Market don't care. I wrote the article yesterday. I probably looked like a fool saying risk off is a choice. And the market's been up ever since. And we are, like I said, 2%. I think 1.7% away from all-time highs. We're up 85 bips alone today. So the March 11th call for all-time highs is actually not that crazy. So that's what I see here. I don't have anything different to tell you. I know a lot of people might be saying, oh, Shirley, don't call me Shirley, it's John. But in the past 2-3 days, you'd say, oh, definitely the forecast has changed. No, not really. Things look decent here. I'm still forecasting all-time highs in SPY. Put a little button on the resiliency of the market. We hold 680. Like I said, that 687 level. I do think we'll start to go forward, as I said, into new all-time highs middle of next week. Should things change, I'll see and adapt. But I'm also seeing from the turtles in terms of the 1-month breakouts, Bitcoin, XLY, XLC, that's absolutely risk on. Mega cap tech, looks like it's been flushed. Let's get in the weeds here and see what they're absolutely buying and selling today. Number one, high yield. They are shopping for high yield. Okay, so they're going a little bit lower in quality. It's not what happened Monday. Oh, let's buy the dollar. We're absolutely in fear. Only thing that was up was the vol and the dollar, safe haven, and it was a little bit scary. High yield here, pretty interesting. Okay, the high yield group peaked back in September. Again, this is when we had the uber tranquil state of markets, Bitcoin running, high yield running, Nasdaq running, etc. And now it's fell on its wayward, fell by the wayside here a little bit. A real big test here as of Monday. Okay, this was a very important flush, and we got oversold high yield for the first time going back to that October 10th, that very ugly level, those lows. It held it. HYG almost, that support of SPY, that brick wall of 670. It looks like HYG has a brick wall of support going down to about $80, and that goes all the way back to the end of June. And again, the high 8130. This is HYG. It's a low vol, high yield fixed income ETF, of course. But looking at the structurally, the 200 moving average is at 80.49. It is 10 cents away right here. They're loving it today, up 34 cents. That's a big move. This has a 25-cent ATR on an $80 stock. Like I said, low vol fixed income ETF. It is holding VWAP, which is 80.34 on the day. This looks decent here. I'm not so sure if everyone's going to start crowding into it immediately. The chart does look super constructive, though. I like the 80 floor on it. To me, this might take a little bit of time because I think folks are going to be a little bit picky, as they should be, in terms of investment. But I do think this gets to 80.75 in about 2 to 3 weeks. So I know it's a little bit of a hard read. It's 35 cents from here, about another 40 bips. But that will be constructive for high yield. And I think it probably cools off and folks let go of their bids right around 50 RSI. And like I said, that should coincide with right around an 80.75 mark for high yield. They're gobbling up today. That is a multiple standard deviation move for high yield. And again, look at the horrendous candle on Monday, down 55 bips. And then yesterday, down 20 bips. You always want to see the volatility contraction, the losses contraction. Losing by less than half is a great sign. That's exactly what we want to see. Down 55, ugly. Down 20, okay, less ugly than today. Boom, round trip a little bit, up 30. That's exactly what you want to see. Let you know that trend is a little bit exhausted, and that's exactly what we're looking like. Massive volume too. That capitulation yesterday equaling top 3 volume days of the year, let alone, April was massive volume here in HYG. So they were selling first and asking questions later. But that is it on high yield for you fixed income folk, a major market focus today. Number 2, for a lot of you cracked out beta folks. QQQ, a massive day here at 1.7. We were talking about the constituents powering this. Tesla, Amazon, there's many, Meta, Google, a lot of having, big moves today. A lot of dispersion. You have to analyze each index on its own. This isn't just, let's buy, whatever for liquidity's sake, SPY, Qs, Dow, it's all the same. No, every index truly is moving its own way. So what I said for SPY doesn't necessarily immediately go for Qs. The Qs for me is a very mixed picture here, to be very, very honest. Qs peaked, as I said before, Halloween week, 2 days before Halloween at 637. Came very close to falling to 200-day moving average yesterday, but it did not. The 200 days at 588 clean. It bounced off of that. We've essentially been range bound in in Qs since October 29th, and the range is 637 to about 587. Okay. Today they're gobbling it up 1.7% is the Qs. It's just reclaimed 50. I'll round up 51 RSI. The issue I have with this is it's peaked out at 53 RSI. We haven't been above 53 RSI since January 30th. Not impossible. I just think that this rally, to be frank, for me, started on about here. I do a lot of cycles work, and to me, this rally started here. Once these lows were no longer penetrated to the downside, I have this rally beginning right here where my cursor is. On around February 19th, VWAP of the day is 603. We're up, $8 from there, about 1.5%. I just think this is, so two things similar to what I said about the SPY going to former level 698, and then it gets that piercing to 703. What it looks like to me in terms of probability here, I love seeing the stochastic momentum mix start to pick up some momentum here. I just don't know if it has enough gas. I think in terms of like SPY being tethered, the price action to me, I have a lot of conviction. I've been saying it's 687. I think Qs get tired. I want to see it straddled around 609. So I'm thankful that it's 612 here essentially. But I do think this hits its head at 630. I just don't see the buyers. And 630 is a lofty. 630 was right here where I'm putting my cursor. 630 is like a lofty goal here. That's going back to those January 29. You need to see RSI go above 55. You need to see this tug of war. Folks say, no, you know what? I'm going to buy software. I'm going to buy tech. So be careful of the dispersion under the hood. Fiverr is not the same as, I know it's not a major weighting in the queues or anything like that, but you got to be careful of the Monday.coms, the Atlassians like Jira's, GitHub, which is facing all-time lows. Be careful versus, Tesla ripping right now, Amazon, Meta, Google. Those are, safe havens. Folks are loving that. So be careful. So that's why it's difficult to talk about this just in terms of the Q basket. But the money flow has been good. Last thing I'll look at here for the last, 2 weeks, overall, they have been, in terms of 3 to 4 o'clock, it hasn't been horrible money flow, all things considered. I do like to hold the 200 moving average. I just think it gets tired around 630 and folks will say, still, failed breakout, back from here in October. I don't think it's that 637. I think it may get within 1% and freak people out. And then, a little bit of a rug pull. That's what I'm looking at for QQQ, but they're loving it today. Number 3, mover to the upside. So they're loving high yield, risk on. They're loving Qs, risk on. And they're loving Bitcoin, super risk on. Bitcoin up 7.5%, a monster today. This is live right here, up 7.4%. I'm looking at the old IBIT, the most liquid proxy for Bitcoin run by Ishares, BlackRock. So similar, again, don't forget this peaked October 6th, just about 3 weeks before NASDAQ. I'm looking at the spot price, $72 for Bitcoin. And this thing truly fell into purgatory on election day, had a little bit of a meerkat on a week later, November 10th, and just buy. After that, see you later, slinky down the stairs, going lower, lower, lower. The question is, was the bottom a month ago, February 5th, at $35? Was that objective achieved of a 50% reduction, 72 down to 35? My boy Quang, I don't know if you're watching, but he said typical 50% reduction in Bitcoin. That's how we get paid. And he's been a buyer. He's been long since the white papers. Sorry to out you there, Quang. But this is important. We are now at 51 RSI. Again, there's correlation here. We were just saying, this Qs get to 51 RSI, overbought close to that 55. See who's in control. This is the first time Bitcoin has been above 50 RSI since January 16th. So love to see that. 6 weeks high now in RSI. I look at everything fractally, RSI highs, 1 month breakouts, etc., which this is right here at 41.64. Just like when I said this, and I don't want to get to Korea yet, No Salama said, well, we'll get to that. But when I chart just straight up looking at charts, that's when I'm usually on the right side. 1 month breakouts, I don't like to fade, but it's not as sticky as a 3 month, obviously, or 6 or 12 month. That's really what the algos really try to sort out for strength or weakness on a 3 month breakdown, 6 month, etc. inverse. To me, this rally began on February about the 6th. So like after this, honestly, I know that's a month that's pretty much off from the cycles, but to me, I don't see like the lows. I know, yes, we did make further lows on the 24th. This is art and science. I know it sounds pretty crazy, but the rally to me has begun from this 36 handle, and now we're here at $41. It's pretty important. The 21-day exponential moving average is $40 even on IBIT. We are above that right here at 41.62. They're loving it. View up on the day is 41.18. It's holding that. Next levels for resistance. I mean, there's a short term and a medium term. You're at the upper Bollinger Band right here. I would have to think this stops at $44. I just truly think that's $3 away. see how it trades in the next couple of hours, overnight. It's one of the cool things about crypto being a 24-hour market. You can always, always watch it and see where risk sentiment is. But a great run for Bitcoin. I think it has maybe another $3 to go. And then I'm just not so sure it has anything more to give than that. I do like the risk on signal. I think it probably has, like I said, another $2. The candle looks decent here. Like I said, up 5%, off 1, up 7 today. I'm not seeing contraction yet. If you start to see today up 7, today tomorrow up 4, and then 2, you can see the ball bouncing off the table. It's running out of momentum here. So I want to see how it holds here with the 51 RSI. Last time I did that, they said no thank you. And the 200 moving average immensely heavy here at 57.5, immensely. Corresponding with 100K even in Bitcoin. So we shall see. It looks like it's got another $2 to go, to be honest, in IBIT. They're loving it today. Let's get to the losers and what they're saying. Get me away from. Natural gas. This was also getting sympathy bids with the oil explosion over the weekend with the Iran strikes. And not as much as crude oil, but nat gas was a major problem. Strait of Hormuz closed and Europeans not getting natural gas. So it really was an issue. Today, it is down 4%. We actually said in the notes, I had it in the video here around February 24th, I said, right there, I said nat gas looks good for a bounce. VWAP that day was 1151. I said this probably goes to about 1240. And the day, look at that. Yesterday got to 1280, and now a bit of a plunge all the way down to 1175. I believe from the price action, what it suggests to me, I think this holds around $12.20. And then if it gets a little bit, if there's any kind of escalation, this should warrant a visit towards $13 again. But this 200 moving average at 1368 looks very heavy. Nat gas is not getting that in love commodity bid like the rest of them, like oil, crude, and Brent. This is just not. And look at it again. This is what's so important. RSI reaching that neutral 50. Who's in control? Is it buyers or is it sellers? Look what happened here. 49.8, and they said, nah, no thanks. Too rich for my blood. I'll let go. That's important. Okay. The high being the highest RSI has been for Bitcoin. For nat gas above 50 goes back to January 30th when it had that huge pop up 12% on January 30th. So it does this. It did that here. It did that here again. So Jan 30th, they did that back there. An ugly candle December 5th. Just not a believer of natural gas. It makes widow makers of us all. It's a bad product. And I just don't think it warrants a long overall. But this does look like it may make another move towards 13. Don't like the candle today, though. For me, this is a no touch. Just giving you analysis through technical analysis on that. It is very messy as it sounds. Okie dokie, artichoke. They are selling nat gas heartily, though, down 4.5%. It was down 3.8 at my writing. Okay, volatility getting crushed today. When I wrote it was down 3.6%, down a little bit here, down 3.7. My gosh, dude, look at this. 200-day moving average. I know it's difficult. I always say to chart a non-time series like VXX, but it still does teach me a lot about knowing, just basically the pricing of puts and fear overall in the market, and are folks more greedy or more fearful. Look at that, almost similar to the December 5th candle on nat gas, and you know what happened after that. Although at least nat gas got above its 200-day moving average for a second. It tried with that massive fear yesterday. It was up 4% VXX, and if you remember, it went down throughout the day. You've been rewarded if you sold at 935. Sorry, because time has been on your side each time to wait till 355 if you have to get out and then exit, because prices have gone higher. And again, look at the move here. So VXX, I will say, is in an area where we had been, a little bit more fearful for sure. Just to very different geopolitical news and layoffs and employment numbers and Trump tweets, whatever have you. But we've been since January 20th above 40 RSI on this. The low came January 9th. So we are in slightly an elevated volatility regime, I will say elevated, but I still know who's boss here when SPY is about 1.5% from all-time lows and the 200-day moving average is rolling over like this. I'm not a believer in volatility, no matter what's going on, overseas. Hence why my article was written, risk off as a choice. All that being said, I think VXX holds in right around 28.30. I think it continues to swoon a little bit. If I'm calling for all-time highs in about a week's time, then this should go lower as proxy. It's going to hang in around 28. Right here as I talk to you, it's 29.36. It's going to hold 28.30, I believe, for another day or so. It might give up the ghost today. Probably not. But I do see in the next 1 to 2 days bucking under 28.30. And then to be frank, I do see it headed to about $26. And then that will cause some FOMO, folks saying, let me gobble up equities. Maybe not so much emerging markets, which we'll look at next. But they're not fans of volatility right here. This has been selling off, and I think it's going to continue. I think you have 26, maybe 26 even is a little bit too aggressive. Don't forget the 52-week low, all-time low for this is 25.64. 26 would make everyone fat and giddy. I'll revise to 26.5. You'll get some expansion here from the Bollinger Band, and that'll be about it. And we'll inch towards tranquility in markets. I know it sounds psychotic. I'm just looking at charts, which is what I tend to do. And they're selling volatility. They're selling that gas, and they're selling Hong Kong. Hong Kong, this is a multiple standard deviation mover. I know it may not seem like it, but down 1.2% is a big move. Hong Kong peaked just a few days ago at 24.27, and they're selling it pretty ugly today, down 1.2%. That is pretty much from the top Bollinger Band to the lower. And this chart looks amazing since, whoops, let me exit that out. This chart looks absolutely stupendous here, going back from Liberation Day since April, with a peak, like I said, just a few days ago. Be careful with the emerging markets here. Folks are going for quality. I know we opened the show talking about high yield. That's American credit, American fixed income. Be careful with the international markets. I don't think the story's over by any stretch. I will get in Nikkei, Japan, Hong Kong, Brazil. I will do that when the time is right. I don't like seeing things absolutely nosediving here in terms of RSI. The lowest it's been since New Year's Eve. Doesn't give me warm fuzzies. You probably get a discount, but that's not how the turtle system works, which is how I live now. I would give this about, honestly, like 2 weeks to cool. It would be awesome if you can get an entry at around 22.75 to 23 even, which is 1% to lower from here. I would let the dust settle on this for about 2 weeks. In terms of probability, what's more likely to happen, I do think it stays tethered to 23.5. The flows have been awesome in this in terms of money flow since Thanksgiving, and it's been kicking SPY's butt, honestly, since Liberation Day in a significant manner, minus the basing it's done here when it's consolidating here and then consolidating here in the fall, but it resolved higher, as I said, to new highs. But be careful. Sellers are in control. 46 RSI confirms that to me. View up on the day is 23.19. They are bidding above that by 6 cents. So some appetite to get long. But yeah, they are hammering it today. So they're hammering nat gas, vol, and Hong Kong. Let's see what are the top 3 gainers of these wild, wacky past 5 days. Number 1, no surprise, oil. When you close the straight like that, less people get it, and it's much more expensive for countries to import, and it's pretty much that. And one of the reasons why international or emerging markets got hit so hard as well, it's a lot more expensive for South Korea to get oil. Oil again today up 90 bips here live. That was a 52-week high yesterday at 94.37 outside the upper Bollinger Band for 3 days. Look at that. That's absolutely war. Overbought. It's at a 79 RSI, so they're buying first, ask questions later. The Turtles has me in XLE right now. A nice breakout. We always say a breakout from a former area with overbought. That happened February 27th. Look at that. The market knew the war was going to happen before. Okay. I mean, honestly, I was reading an article about that as well. The smart money always knows. And yes, it gapped up 6% on Monday, but this thing went to overbought. Very close, very close. I bet you it's probably 3:45 p.m. on Friday that it made that move, essentially. Here, this thing is nosebleed territory. My target is honestly about 87.5. So if there's any kind of de-escalation or the White House says, we're looking at some kind of negotiation, anything like that, you are going to see this probably plunge towards $80 which is $10 from here, about 10%. So the same thing on South Korea, and it happened. I know I probably sounded psychotic when it happened at all-time highs, and look what happened. It was correct. So this is a fact. When you get so away from moving averages, that's leverage. That's trees not growing to the sky, all coming together at one. Massive volume here too. Looks like everybody that wants to be in oil got in essentially. And then you have less enthusiasm today, up 1%. Not bad. But again, this thing's up 13% in the past 5 days for an average of more than 2% a day. Today, weakening a little bit. I would not particularly chase this one here as it's above target. I do think this visits about $80 in the next 2 to 3 weeks. If you wanted to buy this today, again, volatility is very high. Obviously, if you wanted to buy it, you can with the ATR is 305. So if you get in and it goes $6 against you, so it drops to $85, get out because it's probably going to 80. Save yourself that $5. All right, the number two, and this is why this is all war trades, number two best gainer of the past 5 days is vol. So it's oil, it's vol. So that's typically what you buy when there's Mideast geopolitical tensions. We just did vol. It's one of the big losers today, but still up 7% on the week for an average of, less than 1%. I'm talking about last 5 days for an average of, 1% and change a day. Today, a big reversal in that and an ugly candle, and it's making lows. Low in the day is 28.99. It is under VWAP today. Yeah, they're not a fan of vol, down 4%. I already gave you my forecast for that. Quite bullish for the markets. And then another chart that we repeated, number 3 trade of the week, Bitcoin, up 6% or up 1% or so a day. Today, massively bucking that trend up 7%. That's why I'm just, I got out of the Ethereum short, obviously said, no, that this is going the other way. Folks are liking this right here. You are at the upper Bollinger Band. I'm very interested to see if it makes a move, as I said, to the 50-day moving average, which is 44.42. I think that's what it's going to be magnetized towards. But I'm definitely foreseeing a little bit more strength potentially in Bitcoin. It is your third best trade on the week. So they're loving oil, they're loving vol, and they're loving Bitcoin. Who knew? Now let's get to the bloody part. Oh, Annyeong, no more. Annyeong, no. I have to learn how to say goodbye in Korean. So when this happened, okay, we were talking about it, and I said this was around the 26th. Yeah, this was last week. We were outside the Bollinger Band 4 days in a row. I said that's pretty much nosebleed territory here. And folks say it's so hard to get into this EWI. How do you do it? And that's why we have a system. The gap is what destroyed my mental health, unfortunately. But a lot of good things happening in EWI overall. But take a look at this. When we were at 154, I said this has not no business trading up here, but it's definitely extended. And this could and should drop to 135, and it would be healthy. Sometimes the market gives you what you want quickly. Sometimes usually it goes further and more violent than you expected. What happened was I said my target was 135. This thing got as low as 123 this morning. So, and life comes at you fast, but look at the beautiful hold. And again, if you don't understand anything about RSI and neutrality and what that means, look where it dropped. This is like a Michelangelo art piece to me. This dropped to 50.4, and they said, no. This is a superstar. Let me buy this. This is the number 3 winner year over year. Let me buy this. And that's exactly what they're doing, up 2.5% today. You saw a horrendous candle yesterday, down 10%, the bloodiest day in Korean stock market history. And today, a decent bounce, holding 50 RSI since Christmas week. Similar to what I said for emerging markets, let the dust settle a little bit. I'd rather buy this into strength. What I think is going to happen in South Korea is give this a week. Give this a week, revisit it. If SPY's at all-time highs next week, then I'd say, okay, let me see where EWY is. I think this would be, it's hard to predict a wild bull like this, and that's exactly what you're doing. But the chart has been just absolutely amazing since May. Just amazing. What I think is going to happen is it's going to be straddled close to 135. Again, this is very concentrated South Korea. This is Samsung and Hynix making 40% of this. So when they let their foot off the gas in tech, this gets hit first. And if people were super leveraged, the Koreans are a bit of degens, kind of like us in the States here. And look at the massive volume yesterday. Massive volume, historic, 65 million shares. I think the thing averages like 2 million. So just ridiculous. Everybody that wanted to get out pretty much seems like they have. Give this a week to settle. If they want to flush it again, it probably does go to 122. I don't think it's going to happen. I think it's straddled close to 135. And then honestly, probably I'm not dismissing the story by any stretch. I think you get new all-time highs in South Korea end of March, maybe early April. And the target for that would be right inside actually of the former highs. I'll take back what I said. It's $3. I see it. My target's around 151. So basically 3% away from its former highs, which were extended to begin with. So that was the bloodbath in South Korea. Don't worry, we got more. Pretty much the mantra, though, is, let the dust settle. Some of these are still getting their legs underneath them. But last thing, South Korea down 9% over the past 5 days for an average of, almost 2% a day. Today, up 2%. So perhaps a reversal. I was also in this Taiwan. This is Taiwan semiconductor heavy weighting. So again, this is where things are getting liquidated because they just honestly ran up too high. Look at this chart. All these charts have been like impeccable, just amazingly compelling since Memorial Day, basically here in the States. Taiwan hit highs February 26th at 77.25. Honestly, almost the same thing goes. This thing's down 7% or, 1.5% a day. Up 50 bips today. Decent looking. This one a little bit under 50 RSI. They dropped this one to about 48. A little bit less exuberance today, up 50 bips. I give this a week. If they flush it further, they can send it down to 68. I do think it holds around $73. I like the candle today. I do think it probably does go to $73. Again, I'm going to want to buy emerging markets into strength. I don't want to buy on a pullback and get things on sale. This is not the time to get things on sale. Be picky. And I would say what would be the target for this? Probably end of March, early April. Probably very close. A rock's throw away from its former highs. I have a $77 target for this. Would be $6 advance from here. So massive, about 8% rally from here. So if you're not gun shy and you want to go into the emerging markets, it's possible. They could reward you. I would just give these things like another week because they're gobbling up U.S. software beta right now. They're picking up Bitcoin and Qs. Those are the trades. And then the last one, KWEB. This was a short candidate, came very close. It didn't get my level actually on the turtles on this. Just look at this horrendous looking chart. It's still 20 RSI. It's up 50 bips. Chinese tech has looked absolutely atrocious. It is the third worst trade on the board. Understand, I'm not saying A share. I'm not saying FXI. I'm not saying EEM. It's in the past 5 days. It's been South Korea. It's been Taiwan. And it's been KWEB, all between 7 and 9% declines over the past 5 days. This looks horrible. The 200-day moving average has now started to decline. This hasn't sniffed a 50 RSI since January 29th when it started sniffing its 200-day moving average. This looks ugly, but like Bitcoin, I do expect a dead cat bounce, and this looks like it should get to about 32, 34. If you're a little bit crazy, you can buy. I really don't want to do it. You could buy the, like the June 32 calls. They're probably really expensive, but understand this isn't 40 RSI or even 30. This is 20 RSI with one. My God, this is the second green day since February 17th. That's not good. So there's not a lot of interest here. No investor appetite to buy Chinese tech right now. But a dead cat bounce, I think if you want, if you have the appetite, I do think it probably does go to $32 and about 30 cents, $32.50 over the next couple of days. You could do it with a stop. It's super volatile. The stop is 76 cents. So if you wanted to, you're getting right here $30. And then if it gets to 30, if it goes down at $1.75, or I'm sorry, $1.50, get out because it's probably going lower. But then I would exit at $32.50 for the target. Okie dokie. I know it seems like not a lot of trades today. Is more so analyzing the market, but a lot of risk management has come into play this week. So, I was absolutely bloodied, bludgeoned, beat down yesterday. Still up double-digit percent on the year, having a great start, honestly. But reforming the portfolio right here, Turtles has me in XLE. I'm in Shield, and what was the other thing? And the GDXJ, the gold miner juniors. I'm hoping to pyramid that one hopefully soon. All right. So best 3 trades of the past 5 days. If you had this on your sheets, you're crushing the stock market. Long oil, not XLA. USO is the one that really obviously skyrocketed because of the strait being closed. Short South Korea. I was not on the right side of that one, although I did exit. And then short Taiwan. These are the trades du jour over the past 5 days. All right, I will be back on Friday. Let's see what ensues and what happens for the next couple of next 48 hours, especially in crypto. Peace.